I'm now joined by David Bosio. He is from Shaw and Partners. We want to talk about the current market sentiment. David, what happened? Is there meant to be a Santa rally or not this year?
Good morning, Kai. I was still waiting for it. It's only a matter of time. As many people who speak to me know, I probably lean to the side of the eternal optimist. So I'm here waiting patiently. But I must say, I did a small short survey on LinkedIn asking who's expecting a Santa rally, and I did get a lot of responses to that, and it was virtually 50-50. 50% thinking that we're going to get a rally in December, and 50% thinking we won't, which tells you the market's very, very much at that point where no one really knows whether we're going up or down. So maybe it tells us a little bit about where we are in the scheme of things.
I mean, there's been a few junior IPOs trying to cram in, I guess, and some raisings coming in, trying to cram things in before Christmas. It hasn't been that great of an outcome for them, though, has it? Generally speaking.
Yeah, there's been the whole year, I think, can be certainly summarised by an enormous boost in the number of IPOs. It's probably never before in terms of the volume of IPOs hitting the market, and many of them are junior exploration companies with early stage assets. So we saw, I guess, probably at the beginning of the year, many of these coming on with very, very strong premiums. What I have noticed now is the volume has certainly gone up, so there are a lot more almost flooding the market, and many of them are coming on either at par or slightly underneath or slightly above their prices. But we're not seeing these massive stags that some investors are looking for. I think it's something just to be conscious of, because IPOs do, I guess, consume a lot of capital. So investors put their money in, and it takes usually about a month to 2 months for those companies to actually list and hit the boards. And if it's hot money, then it's always looking to circulate. So people are tying up their money for a period, and then when these companies come on, they're looking to sell them immediately, and that's okay. But it's also, if that's what the herd are doing, then you just need to be conscious. If that's short-term money, and people are just looking to get their money out quickly, we may start to see a few of these IPOs coming on a bit soft. But I do feel like, just in general, coming into Christmas, there's a bit of fatigue out there. I think investors have had a terrific year. All in all, I think it's been another very good year for the markets and for investors. But it does feel like a bit of fatigue's creeping in, and I suspect by about this time next week, no one's going to be writing any more checks for IPOs or placements, and it might be time to hang up the boots for Christmas.
Yeah, you mentioned the herd, but there's obviously different animals within the herd, so to speak. Gold, for example, gold stocks, they haven't had a fantastic run, have they, compared to maybe some of the others?
It's been a tough year for the goldies, and again, I've been very much a gold bull, and I still feel very, very strongly about the theme as to why gold should be one of the preferred asset classes. So maybe to your point, we'll give everyone the advice. If we all go out and buy our family, loved ones, our children, a gold coin for Christmas, we'll see a magnificent spike in terms of physical demand, and that might help send this gold price higher. But on a serious note, I feel we kind of started the year around these levels with gold, and we're still hanging around. At the moment, 1780 to 1800 seems to be where we're stuck. So what started with a lot of promise for gold hasn't really eventuated, but investors do need to kind of remind themselves. I think it's important. What are the main drivers of strength in the gold market? Obviously, there's volatility in the broad market. There's inflation, there's real interest rates, and real interest rates is the key. Although people are probably looking at the moment saying, well, we're going into a rising interest rate cycle, you still need to look at real interest rates, which is the interest rate factored in for inflation. So if inflation is still growing higher than the interest rate rises, we still have a negative real interest rate environment, which is historically a fundamental driver for a strengthening in the gold price.
David Bosio from Shaw and Partners, thanks for the update.
Thanks, Kai.